Every year, more than 150 finance ministers and central bank governors converge on Washington, D.C. in the IMF World Bank meetings. What do these countries discuss while there?
To put around the table all countries to talk about their economic policies, and in particular two things: how their policies affect others. This is particularly important for big countries, so the United States. But I think the most important is probably sharing things with each other. You know, they meet the IMF regularly anyway in country.
As members of the IMF, countries can be asked questions on their economic decisions and policies, and can even be challenged.
We ask what are the challenges the minister or the central bank governor is facing, and we provide our own prescription. We can, most of the time, we can have very candid discussion on various issues.
Uganda in particular does not borrow from the IMF, but has what is called a policy support instrument relationship, in which Uganda is advised by the IMF on its economic policies, and Uganda must commit to work with the IMF on agreed parameters.
He said, what is PSI? Why do we need to borrow from the IMF? And we said, no, it's not a borrowing. It's like a letter of comfort from your banker when you go elsewhere and they say this is a credit-worthy risk.
If a country like Uganda intends to borrow from the international arena, being in the good books of the IMF counts, and being monitored by the IMF improves the country's profile, even in the eyes of some foreign investors. This therefore explains the annual travels of your finance minister and central bank governor to Washington. Samuel Setumba, NTV Business.